Good morning, everyone. It is Wednesday, September 21st, 2011. Taking a look at the morning charts here this morning, we have got the US dollar index, and this is the 60-minute chart. And you can see we're going back about a month. If I just zoom back, or sorry, not a month, a couple weeks. Zoom back from the recent pattern, we had a consolidation down here, had a nice impulse wave to the upside. We had a pullback. We ended up taking a long position into a pullback here, and we've got a nice bounce, getting out right up near the highs here a couple days ago for some profits. And we've been seeing it consolidate, trying to eat through this previous resistance top here. And if it can break through that, I think we've got a huge move to the upside. If I just jump to a longer time frame, a 4-hour chart, you'll be able to see where we stand here, and I'll just zoom out even further. This is the impulse leg that we had right here to the upside. We cleared several major levels of resistance, these previous peaks, and the fact once you get a breakthrough, usually you get some type of test. It came right back down into these previous peaks here. There's also a little cluster on this breakout over here on this intraday chart. We had a nice pullback, a washout kind of panic sell-off into that support zone. That's right where we actually went long, and we took some gains off up here just the other day for a 1.4% gain, and hold the rest with a break even and anticipate higher pricing still. Now, bull flags are usually a halfway mark in a move. So if you take a measured move here, we'd have from here to here. If you just measure that up, you've got 1, 2, 3, 4 cents, an easy 4 cents to the upside. You take that from the pivot low here. You go 1, 2, 3, 4. Brings us somewhere at about 80 and a half, 80 and a quarter, which brings us into this key resistance zone over here, previous high. So if we do get another upward thrust here, we're going to see the equities market most likely get hammered pretty good, go to the downside. We may actually see gold move up with this, because this would more or less be saying that there's some major issues or increasing fear overseas, and the euro gets clobbered and money moves into the safe havens, which the US dollar is obviously being seen as more of a safe haven, and we're going to probably see gold move up with it, which isn't the norm, but it is very likely that that could happen. So that's kind of where we stand right now. A lot of people are wanting to short the dollar here, but I think this impulse leg, which is very strong, the fact that we had a quick little shakeout or fake out here, and then it's starting to work its way back up, I do see us possibly going quite a bit higher in the US dollar index. If not, we've got our stops in place. We've already locked in gains, and we shouldn't lose anything on the trade. Well, if anything, we'll be moving our stops up actually possibly today into the money, and if it does show any signs of weakness today or tomorrow, we'll be getting out with a gain for the second half of that position. So taking a look at commodities, commodities are affected directly with the US dollar prices. If the US dollar, I just want to point out, this is a 4-hour chart. You can always see it up here. This is crude oil. You can see it down here also. 240 minutes, that's 4 hours. Anyways, if the US dollar goes higher, it's going to put a lot of pressure on commodities, and we'll most likely see crude oil, which it looks as though it's already started to roll over, to probably have another sell-off. Now, I've been pointing this chart out for a while. We've got this rising wedge, came right up into a resistance zone here, and this is right where we shorted it. It was right up here a few days ago. We've got a nice move on the pierce of this support trend line. We actually took partial profits for 7.4%. Had a little bit of a bounce, and it doesn't look as though it's getting much of a bounce out of it. It's just holding up. It feels more as though it's eating through support, and eventually it's going to collapse, and we're going to see crude oil fall down somewhere to the, I can see the 81 being reached fairly quickly. There's potential for it to go to 76, and potential for it to go around all the way down to about 72, depending on how things unfold. So I really like this setup, and we're already in the money with protective stops in place, and no matter what, we should be making money on this trade. Taking a look at gold. Gold here. This is the 4-hour chart. You can see we had a huge run up, and it's become very choppy here. It's consolidating. It is starting to form somewhat of a bullish pattern. It's kind of got this kind of rising wedge here, and the longer it goes sideways, the more oomph it has for the next move up if it's going to continue higher. So if we do see some issues not being resolved overseas, we see fear creep right back into the market. We'll most likely see the euro fall, US dollar will rise, and I wouldn't be surprised if we see the gold actually break out of this and possibly even go up and make a new high somewhere around the 1925 area, somewhere up there. It could even go higher. And of course, this is going to also affect gold stocks, which are starting to perform pretty well. I'll show you that in just a minute. Looking at the silver chart has been consolidating for a while. We had that huge run up and then it just got hammered, and more or less it's trading in the middle of its range, kind of in no man's land. That being said, it is trading above the recent price action. So we had resistance under here, finally it broke through it, kind of chopped around in here, creating volume and demand, or more or less a support zone. We had a run up, came down, bounced off that support zone, and right now it's just starting to fade down into this level, and volume is actually fairly light, which is a bullish sign. So we may actually see gold and silver actually have another boost here going forward if fear creeps back into the market and people start piling back into the safe haven. Now, silver is a lot tougher to trade. It moves on a very large percentage basis, and you've got to be very careful because on a big day when stocks sell down, a lot of people have got into silver because it's very speculative, and you can make some pretty good moves on a daily basis. So if stocks get hammered and fear creeps into the market, there's a very good chance silver will actually not move up as much, or it could actually sell down with stocks. And that's what's happened over the last couple months. It's just been trading more with stocks than it has as a precious metal itself. So out of everything, I would prefer gold. You're not gambling nearly as much. Silver is more industrial, more speculative than it is safe haven, in my opinion, unless you're in it for the extreme long haul and really want to hold it. Now, taking a look at the GDX ETF, which is the Gold Miners Index, holds gold mining stocks. This is a 60-minute chart, just zooming out a couple weeks. And yesterday we had a huge pop in the morning and bringing up to a key resistance zone where it hit two previous times here. And we had some nice volume on the update, on the up volume surge. So money is moving into gold stocks. If we zoom out to the weekly chart, we can get a really long-term view here. We're going back 2.5 years, over 2.5 years, and more or less gold stocks have really underperformed for a long time. They've been trading more or less in this choppy range here, not really doing much, while gold and silver rocketed higher. But what we've seen now is we've seen gold stocks pretty much trend up, break to a new high, and they've been consolidating just on this breakout zone. And there's a couple factors playing into this. I think the fact that we might see the U.S. dollar continue to hold its strength, which is going to hold investment value up. I think the falling crude oil prices also helps gold miners. They are very energy intensive, and crude oil does play a big part of their it does manage a lot of their profit margins because they use a lot of fuel to pull gold out of the ground. And also, if gold does take this next move up here and the euro falls, we're going to see money move into gold, and that's going to also help gold stocks. So it looks as though they're trying to make a breakout, and we might get another surge to the upside. I could see low mid 70s possibly for GDX. Now, taking a quick look at, I'll just pull up the TLT, which is the bond fund. We are trading, if we just zoom out long term here, you can see we're trading up near some previous peaks and some pretty major spikes. I just want to zoom into a shorter time frame. We'll go to the 4-hour chart. This chart here is showing a sign of a market topping. This is a very typical pattern of topping, and what we're seeing here are multiple highs, just newer highs, followed by sharp selling, and it's starting to get a lot of gaps in the market. Volatility has picked up, and we've moved to a new high there yesterday. Now, as much as I really want to get a short position on this, I kind of want to wait it out a little bit longer. A lot of times, if I just clear this chart a bit, A lot of times with this pattern, what we'll actually see, we'll see the market move up like this, and then you'll see a final run. It'll kind of pick up speed, and then you'll see it get clobbered, and then we'll see some type of kind of pause, and then we'll start to see it go into uh, a big drop off like that. So while I do think it's topping, it's very easy to get a blow off top, which means you get a huge move in a very short period of time. More or less, it goes parabolic straight up, and that's the type of move I actually want to possibly be looking to go short. And the way we would go short is with the inverse fund, which is the TBT. I've been waiting for this play to kind of unfold for quite a while, and it just continues to show weakness. It is now starting to look like it's trying to put a bottom in. Of course, this is just the inverse side of the bonds, and we could see it continue to drop down a little bit more, and we'll be looking to possibly start to scale into TBT. I don't think it's something we want to move a big position in right away, although it does look like it's got potential for a huge move. We could see it continue to drag down for some time, especially if money starts flowing into the safe havens. Then we're going to continue to see bond prices go up, which means this inverse bond continues to go down until we see some resolutions overseas to kind of fix the issues going over there, or at least stall them. Now taking a quick look at the SPY, I'll just pull up the SPY chart here. This is the SP 500 index. Overall, the trend is down. We've been consolidating. It's trying to build a base. It could be forming a bear flag. In my opinion, I'm more bearish on it right now, especially if the US dollar continues higher. If the US dollar rockets higher, we're going to see equities pull right back down. And what we saw here in the last couple of days, we had this big gap down. I pointed out in the pre-market video before we had the gap down that we're likely going to see the market have some type of bounce up to fill this gap. We almost had a gap fill. If I just draw the top of this gap line here, top of the gap was here. It opened here. The following day we had a run up about here, so we almost reached this upper gap boundary. The next day we ended up reaching it, which was yesterday, and near the end of the close it couldn't really hold above it. Near the end of the close we saw some very strong selling ramp up and pull it back down. So I'm still looking for a short opportunity. Yesterday it looked as though the market wanted to squeeze and go higher, so I didn't want to get in front of it quite yet. Obviously by the end of the day, big sellers stepped in, pulled the market right back down. So we'll just see how things play out, and that was also because the US dollar had a little bit of a bounce going into the close, and that put more pressure on the equities market. And that just kind of clarifies that if we get a huge move up in the dollar in the next week or so, we're going to see equities come right back down to their lows, probably break below their pattern and go tumbling quite a bit farther down. So that's what I see for equities. For futures trading this morning, for the pre-market and post-market action yesterday, it was an extremely volatile session yesterday. It was choppy as can be. In pre-market trading, we saw the market rally almost 2%, or we saw it rally about 1.5%. Just before the market opened, we saw it drop 1%. Once the stock market opened at 9:30, which this here is regular trading hours, which is why all the volume is there. Once the market opened, we had another surge right up to fill that gap, chopped around for most of the day, and then into the close we got a strong sell-off. This morning in futures trading, we're actually going to be gapping lower at this time. It more or less consolidated sideways yesterday, or through the night, and this morning started to become choppy and broke down just about an hour ago, and has started to slide lower. So we're going to get a gap down this morning, and we'll just see how that plays out. It could just be a gap and go where it gaps lower and just keeps on selling like what it has done in the past. Everybody, I think, is still, the majority are still bearish on the market, and the second something turns bearish, everybody starts shorting, and it just creates these big gaps to the downside, and prices continue to sell off. So that's kind of what I see going forward. I would like to try and get in a short position, but don't want to chase a move. We just seen about a 2.5% move since yesterday afternoon to this morning's low. That's a pretty big move. Usually you get some type of pause in there, or retracement of that move, maybe back up to these highs, and then we could possibly take a short for the next move down. Anyways, that's it for this morning, and I hope everybody enjoyed the video, and I'll talk to you shortly. Bye bye.